What is up, guys? I'm back yet again with another one. In this video, I'll be sharing a short snippet on a very effective trading technique using the daily candle. Sit back, relax, and enjoy. What we do is we aim to assess what the momentum on the daily candle is doing on a specific day, because that momentum tells us the trading activity that is occurring presently, right now. We can analyze and discuss and say that if the market is to get here or if the market is to do that and come here, we should buy and all those things. But this scalping technique ignores all of that. This is why, to a certain extent, many people I'm seeing are actually starting to prefer it. It ignores all of that. And then it says, hey, I get we have an analysis from the past, but today the daily candle is selling. Okay. So now we would want to preferably then take advantage of this sell momentum on the daily candle. It simply doesn't make sense if you're being presented with a daily candle that looks like this for you to be looking for buy opportunities, right? Because now what you're actually doing is you're going against what the market is doing right now. And if everything is about probability, if we know that the market is selling right now, we just want a piece, we just want a little inch of this sell activity, and then, we bag money, hence the scalping part. That's the, logic behind everything. So first things first, what I want to urge you to do is I want you to look for a daily candle that is moving in a specific direction, but also rejecting from a significant point or a significant area. What do I mean? So now on Volatility 75-1S, you can clearly see that there's a daily order block here, a daily selling order block here. What an order block means in layman's terms is that we actually had buying over there, and then all of a sudden we sold like that. For that to occur, that simply means that there must be some sell activity in there, or should I say some supply in there. So now that price has come back into that area, that supply has kicked in, hence you see the market has gone down like this. Now, the thing is, guys, I need you to understand, on the daily candle, this looks like this is nothing. But on the lower time frames, this is a lot of money, right? You understand? This could be double your account, triple your account, or quadruple your account if you know what you're doing. You understand? Because now, the aim is fine. You're not going to necessarily just enter because we have come back here. You're not going to enter blindly. However, you want to look at the momentum. If the momentum is selling like this, like today's daily candle on Volatility 75-1S has been selling, guys, and it's selling from this order block. So this is what gives us more reason to say that, fine, I would want to get a piece of this. Now, before I even head over to the lower time frames, I have a feeling that there were sell opportunities on those lower time frames. So I know some of you would probably be asking which time frames. So this is now very subjective to the setup. I cannot tell you that always be on the M5, because sometimes you find that it's not so clear on the M5, but it happens to be clear on the M15. This is why I periodically use terminology like go to the lower time frames and look for prominent lows or prominent highs. So now, if this is a selling market, we all know that we are downtrending, right? We're trending downwards on the lower time frames. And we have said when the market is moving downwards, what it does, it forms lower highs and lower lows. Sometimes you have to really kick it with the basics and not complicate things. And since we are forming these lower highs and lower lows, we want to then participate at the most recent high, and then we enter. So when we go down to the lower time frames, we're going there with this mindset to say that we're hoping to see this, and we want to then enter at the most recent high. Now, but before I even go to that lower time frame, this is where I think most of you get confused. What is a prominent high or a prominent low? What really distinguishes a high that is highly probable and one that isn't? All right. Now, common sense would tell you that a highly probable high, okay, sorry about that deleted. A highly probable high would have a significant movement away from that point. So what do I mean? I want, if I'm going to use this high, for there to have been a significant downward movement. Okay, by significant I mean impulsive. I want to be convinced that there was a lot of supply in there, such that if the market is to come back in there, I want to tap into that same supply while incorporating risk management to put my stop loss above, and then I enter. Now, a big problem, right, if I can put it that way, is sometimes you guys are using a high that is not significant enough, or a low that's not significant enough. So now imagine that you have said to yourself, fine, the market looks like it's in a downtrend. This is the most recent high. But at this most recent high, the market is moving like this from there. This is just an example, right? Okay, I'm just going to try quickly draw like that. So you can see that it's not impulsive in nature. In fact, it's got green, red. Like this type of movement to the downside already, it spills the beans about our zone, where the market is falling from, right? It shows that, yes, there was supply, hence the market did move down. But now you can already see that the demand was already interfering with this movement. So this zone then becomes less probable, in my opinion, or in my experience. So these are the zones that I really don't want to tamper with. And before we even head to that lower time frame, what is a significant movement? Once again, the impulsive movement, you want two or more consecutive candles, and then that should be enough. So now, without further ado, let's go down to the lower time frames and see how one could have made money today. I wasn't trading today, I was in front of the charts, but using this daily candle strategy, had you seen that price actually rejecting from this selling order block, it actually looks like a high, and yesterday's candle left that wick to the top, and this is what we have. You could have definitely then gone down to the lower time frames and looked for entry opportunities. And let's just look to see what those entry opportunities look like. So I'm just going to shade this candle, because this daily candle that I'm shading, the red one, it actually represents all the trading that has occurred today. So now it's nighttime, or on my side, but look, it's been, I think, basically over 12 hours since the candle opened. So that's a lot of time, do you understand? Especially if you're going to be engaging on the M15 and the M5. And here we go. So now on the M15, this is what we have now. Here's the maze, okay? So with this is today's trading activity, as simple and as, minuscule as it looks. So what this market structure is telling me is all I needed to do was to find an appropriate high, and then I scalp. So remember, scalp. You do hit and run. If you've seen how I trade this strategy, you already know. I mean, the timestamp is always there. I'll get in there with an account. We flip it. Sometimes you find in 15 minutes, I'm done. You understand what I'm saying? But because it's not really per se about holding for a long time, I'm also going to suffer the mental drainage that can come from retracements, because when you're scalping, you're also going heavy on the lot size, obviously, because the market is not going to move over a big area, but rather over that small area, you can still do a lot to your account. So now let's look at it. What is a significant movement on this chart? Okay, and what is not? I think it's important. So remember, I said 2 or more consecutive candles that really just show a high. I would have taken this. This is on the M15. Let's look at those highs. I'm going to shade them in black. Let's see over here. Okay, so clearly the market has been going down like this. I'm just looking for a nice retracement so that I attack into a high. All right, this is definitely a high point, 2 consecutive candles to the downside. We're breaking structure this low here. I really want to be present here so that I enter, I punish. You understand? Because now, in my opinion, this order block is my high, right? Let me mark the order block properly. The black zone, which is the order block, is the key point of interest for me. Are you listening? So once price gets in here, I'm going to then enter my trades, and my stop loss goes somewhere around here in case I'm wrong. So this could be the $100 stop loss that you guys see. Do you understand? Right? Or maybe you're trading a $20 account. This is your $20 stop loss, right? And now by the time price gets all over here, you can see that firstly, you would have doubled. And now this is even more if you're willing to hold. So now I know some of you are asking, where do you take profit? How do you know when to get out? So now back to that market structure thing. If in a downtrend we form lower highs and lower lows like that, and we're participating, please can you, Sadipa, please can you stop drawing on the chart? It's a bit disruptive. Please don't do that. Okay, so look at it this way, right? Right, we're forming lower highs and lower lows. I want to participate there at the most recent high. So I enter here, I put my stop loss here. Obviously, logically speaking, my take profit should go where? at the most recent low, my first take profit, and then I get out. Do you understand? If I want to hold, I can always place whatever is here to entry, the stop loss to entry, then it becomes risk-free in case it breaks and goes down to the downside here. So sometimes you should be prepared for that, to say, I'm just going to take double, right? Or even double plus half, or double plus 0.2. You need to understand the game you're playing. I've always said to you guys that there's no other business that you're ever going to start in your life and you put in money and then you double your investment in one day. I mean, if you have such a business, please let me know, because I would also want to actually do that, right? But in real life, that's not what works, what happens. So sometimes don't be too greedy and understand the power of what's in your hands, okay? So now I want to talk to you guys especially about how to even assess how much you're willing to risk in terms of dollar amount before price even gets to the zone, right? We're still moving, still on this volatility 75 1S. Here's another one over here. This one was a beautiful one. Nice, right? Because the impulsive movement, this was even 2 or more. This is 3 consecutive to the downside. Price comes back in there, and then you're washing straight. That's just what you're doing. But now, the question that one might have is, why are you choosing the M15 and not the M5? Look, as I said, you can really use the M5. It's really about, is what you're doing making sense with the current market structure and the current candle? One thing, though, is that the lower the time frame, the higher the risk in terms of everything you see that comes to trading. On the M5, look at how this one looked. Can you see it was very clear, gave you even a nice and petite zone for you to participate. And now I want to talk to you about that risk thing. So now, remember, this is the 5-minute chart, right? Let's say you see this and you want to scalp, right? And maybe price has come from this high like this, and now it's all the way here, right? Before price comes back in there, which is where you want to actually sell, you can already assess how much can I risk in terms of dollar amount, and I'll show you how to do it. You click on new order, right? Where's price currently right now? Okay, fine. Yes. For now, it would be a sell limit, right? So I'll put in a sell limit, and this volatility 751S. You see, guys, I actually know these lot sizes by heart, like the minimum. The minimum for 751S is 0.005. It's useless in terms of amount of money, so I'd want to use 1 for now. Understand? Before I even do anything, I have a feeling if I use 1 and I put my stop loss here, it would be like around $45. I don't know. We'll see, right? And then price, let's see, 81.78, 81.78. Stop loss 82.15. For now, we will adjust. We just want to see. I want to show you how you do it. Okay, cool. So now this is where you enter the trade, right? And your stop loss, I told you, see, I know these things, right? Around $46, right about, right? So cool. So with this slight movement here, right? You are saying, while price is already here, you've already done your sell limit, you already know what you're willing to risk. It doesn't have to be $46. It can even be $200. This little zone can even be 1,000. It's all about the money that you have banked in your account and what you can manage. Now that you have this sell limit, you're not placed in any order. Now, you know that if one gives you $52, right, stop loss, right, you do the math. You use a calculator or something quickly and say to yourself, if I want to risk $100, obviously, then I would have to use a lot size of 2 when price enters this zone. You understand? If I want to risk $200, my lot size has to be 4. And guess what? By the time price gets even here, somewhere around here, right? So now this is with that $50 account. You'll be on double. It'll be on 100. This is the first take profit. Remember the most recent low, right here, $58. You hold, and then guess what? Your account is on 150. Do you understand? This is how we play the game. This is how we do what we do. And then you get out. Do you understand? Now, the thing you want to do is to wait for other highs, prominent ones, right? On the M15 and M5, and you do the same thing. You know, if you're part of this Zoom session, then I've sent you the risk management tip. When you sign up on all those videos, all those things I send you, I've showed you how to assess the exact dollar amount that you're going to be risking per trade. There's no reason why you can ever enter a trade and you're like, I actually don't know what I'm risking, when I've just shared with you that tip. If you want to risk $20, you nicely know before anything happens. This is one thing I like about trading. Trading is only harmful to people that let it harm them, right? You understand? It will never take, unless you're trading boom and crash, which is why I don't trade boom and crash, because it doesn't respect stop loss. But anyways, if you're trading any instrument,
everything that you've ever lost, you said to yourself, I'm willing to lose that. You understand? It's not like it just takes away, whatever you were not intending on losing. Before anything, when you place your stop loss, you have already said, this is the amount that I'm willing to risk so that I gain something, which makes it a fair game, in my opinion. The issue is that people then exercise greed and all those things. And, obviously things go south. Okay. So I've discussed that. So now what is the blueprint here? What am I saying? First things first, from the daily time frame, are we rejecting from somewhere that makes sense? Yes, I see that this candle is selling. I mean, it wasn't always like this. Even when it was like this, you already see that's sell momentum, because let's call a spade, it's red. Where are we rejecting from? This nice selling order block here. Another person could, if you're a real trader, you do what we call technical analysis in all aspects. You use all technical tools in front of you so that you just validate what you're trying to do, man. I would have also gone to the line graph. I would have placed, a line here, and I said to myself, you know what? This is actually a high. And now I'm not surprised that price wicked over there. You understand what I'm saying? You see, it's those things, or another person could have, it's all technical analysis, it's all speculation. Another person could be like, actually, look at this. Each time we touch this, we're dropping, we touch, we drop. You understand? So it's many reasons for us to anticipate that sell momentum. But either way, we've gotten the sell momentum. We're scalping. We're not trying to hold the trade for a long time. This is what the session is on about today. It's about the daily candle. We're then going to the lower time frames. We're going to go and look for a nice high to take advantage of. So back to that blueprint, a daily, an area that we're rejecting from. 1, 2, prominent highs if we're selling on the lower time frames. 3, significant movement. What's a significant movement? I explained to you, 2 or more consecutive.
Okay, so that's it from me, guys. If you like what you see, feel free to contact me for mentorship and trading related services. You can find my contact details in the description of this video. Please note, it has come to my attention that there's a fake Telegram channel pretending to be me. Please note that I only have an Instagram and I only operate on WhatsApp. I simply do not have a Telegram channel. So anyone approaching you or messaging you first especially is probably a scam. If you want to find me, you can find my Instagram link, the link to my Instagram, which is basically in the description of this video, or you can contact me. My details are included in the description. Once again, until next time, ciao.